G'day, fools. I'm Scott Phillips, the Motley Fool's Chief Investment Officer, and we got some big news. And when I say we, I have 4 of the Motley Fool's crack team of analysts and portfolio managers at your disposal right now to talk about, I'm going to say probably the biggest, maybe the biggest corporate news on the ASX in maybe a year, maybe even a little bit longer. How big? Well, $40 billion big. I am, of course, talking about Afterpay and the potential takeover by US financial services business Square. Now, as I said, I've got a crack team with me. I won't introduce them all one by one, but I will ask them in turn to give their view on what's going on, help you understand a little more about what's been announced, what the details are, and as importantly, what our crack team are thinking. Speaking of which, let's start with our Director of Research, Kevin Gandiya, the man who, well, frankly, is made to look very good by other people, but also is a smart and intelligent bloke himself, a very capable analyst and portfolio manager. KG, what exactly has been announced today?
Good day, Scott. Thanks for having me. And yeah, I think it is one of the biggest news items on the ASX in a very, very long time. And the news is Square, the US listed fintech giant, is acquiring, or at least has announced plans to acquire Afterpay, which is our own fintech or buy now, pay later giant here in Australia. Now, the details behind the transaction are quite interesting because Square is proposing not to pay in cash, but to use its own shares to acquire Afterpay. There is a fixed exchange ratio. So the exchange ratio there is 0.375. So that means for every Afterpay share that you own as a shareholder, you will get 0.375 shares in Square. So if you've got, for example, 1,000 shares in Afterpay, you get 375 Square shares. And if you own 100 shares in Afterpay, you get 37 shares in Square. And I presume that extra bit there, that fractional, because we don't have fractional shares on most Australian brokers, you will get cash just for that difference. So it is big news. The other interesting bit, which I think actually got lost in the headlines, is Square will actually make it a lot easier for Afterpay shares to get the shareholders to get those Square shares, because Square is listed on the US exchanges. They will actually allow local Afterpay shareholders to buy and sell Square Square shares through what's known as CDIs. They are CHESS depository interests. And basically what that just means is that you can trade those instruments on the ASX. I can actually buy and sell shares in Square. So it's very exciting news. Square is a phenomenal company. So looking forward to deep diving on that one.
So quite cool. $40 billion takeover bid. As you say, it hasn't been announced just yet, or hasn't been confirmed just yet. The shareholders still have to vote on it. $40 billion. And a little bit like companies like Cochlear and ResMed, those CDIs, the CHESS depository interest, trading on the ASX. So if you do, you don't have a choice to take cash, I think, do you? It's shares only, is that right?
Shares only, yeah.
But at least if you do take those shares, you can choose to either have the New York Stock Exchange listed shares or effectively swap your ASX listed Afterpay shares for ASX listed CDI interest in Square. So probably easier than some of the previous ones we've seen. Businesses like, I remember 20th Century Fox going to the US and basically abandoning our market altogether. Xero's done the same, coming from New Zealand to Australia. But in this case, at least if you do part company with your Afterpay shares, or when you part company, if it goes ahead, you will have the choice of retaining some interest in the bigger, maybe better, we'll find out in a minute, Square on the ASX. Chris, before we go into that, let's go back just a step. Now, I'm going to assume 99% of people watching this know who Afterpay is, what they do, but maybe you can just give us a quick sense of Afterpay, the company as it currently exists. Buy now, pay later, I think we probably all know, but just what these days is Afterpay? How big, how important, how good is Afterpay that the Square is trying to take over?
Yeah, so essentially, just to quickly take it back very quickly. So buy now, pay later is essentially a solution that is particularly popular amongst your millennials. So it allows its customers to essentially purchase certain goods and services now and then pay them off in Afterpay's case over a series of 4 equal installments each night. And for the customer, there are a few appeals to Afterpay's offering. So first, most of its customers can use its services, I guess, without incurring any fees or interest charges. So the company does charge late fees if the customer's account is left unpaid for a certain period of time. But one of Afterpay's key points of differentiation when it first started, and it continues now, though there's been lots of new providers come into the market since then, was that the business does not charge any interest. So customers could essentially buy and consume an item now at no additional expense to them, even if they didn't have the funds in their bank account at the moment of the purchase. So this made it a particularly, I guess, attractive alternative compared to credit cards or other forms of credit, which can charge very, very high interest rates if you don't particularly pay back the full amount each month. So as it doesn't charge anything to the majority of its consumers, though, the company does make the majority of its money by charging a fee to its merchants. And this fee is around 4% or just above per transaction. But the benefit to the merchant is that by having this option, it attracts a lot of customers to their websites or stores as it adds more ways in which the customers can transact with them. But a key point of differentiation now with Afterpay is it also has its referral program for its merchants. And if I pull up a few stats here, Afterpay drives around 1 million lead referrals per day to its merchant partners, and approximately 55% of these referrals come from consumers finding their stores or their websites on Afterpay's mobile app. So being a merchant partner is clearly driving plenty of value to Afterpay's customers. So I guess, why is it such an interesting and exciting business right now? Well, we're seeing that the company has really led the charge in the way that consumers transact and purchase goods, and its growth has been absolutely phenomenal. So we see now Afterpay has 16.2 million active customers and over 98,000 active merchants around the globe. And this is a really impressive number, Scott, especially considering that the company hasn't even been around for more than 10 years. So it's been a phenomenal growth journey and a really exciting company to watch on the ASX over the past several years.
Yeah, I like that, Chris. One of Australia's best exports, I think. I think we don't spend enough time sometimes talking about some of our success stories as a country. Everything from the CSLs and BHPs through to the Cochlears, and as you say, more recently, Fortescue's and Afterpay. I should mention too, Ryan, you and I did a video only last week on Afterpay. If you want a really good deep dive into the Afterpay business, if you're an Afterpay shareholder or simply you're wondering what's going on with the deal, how well they're doing, or why Square might have been interested, jump on our YouTube channel, The Motley Fool Australia, scroll down to the Stocks in Focus section, and we did one on Afterpay. Ryan did a great job on that. So it'll give you even more detail on Afterpay for those who are keen. Speaking of that, Ryan, I'll come to you, mate. Let's do a bit of a hashtag humble brag right now. We're pretty happy at the Motley Fool. It was a Motley Fool Discovery 2017 recommendation, Afterpay. It's been a long time position at Motley Fool Pro, which you manage only, 15, 17 months ago. This was an $8 share price at the depths of the COVID crash. Now $129 odd being offered by Square to take this business over. That's a remarkable return for shareholders of any duration. On one hand, we're happy with high prices. Who doesn't like a bit of a premium to take out a company? On the other hand, this might be like Woolworths being taken out at $10 or CBA at $20 or Amazon at 100. All those companies have gone on to much, much higher prices. Of course, it could be the reverse too. It could be an unusually high price, maybe an even unreasonably high price in the fullness of time. Reminded of Skype that got bought by eBay and then Microsoft for stupid money. So maybe it's a blessing, maybe it's a curse. How do you feel? Yes, we'll take the money, but how do you feel about having Afterpay taken away from you as a portfolio manager here in July, August now, 2021?
Look, Scott, I actually quite like the offer made by Square in this case. So just to, I guess, expand a little bit on what Kevin was saying before. So the exchange ratio for Square shares to Afterpay shares is 0.375. So again, if you own 1,000 shares in Afterpay, you would get 375 in Square. Mm-hmm. The offer price is based on Square shares trading at US $247.26. So that roughly equates to about $126 for the Afterpay shares. Now, as I look on my screen at the minute, Afterpay shares are actually trading for 119. So there's about a 5 or 6% discount there. And some investors are probably wondering why that is the case. Often this does happen with takeover targets. For part of the reason is that there is always some level of uncertainty as to whether or not the transaction will go through. And that is also the case in this instance. We don't know for certain that the Afterpay transaction will go ahead. There are still barriers that need to be crossed, regulatory approvals that need to be passed. So that is one factor. The other factor is, as Kevin said, this is an all equity deal, an all scrip deal. So shareholders don't have the option of taking cash. What that means is that Square shares are really the currency. Now, when they're offering $39 billion in this case for Afterpay, there is a decent chance that when the US markets open tonight, that Square shares might open a little bit down. So there is that opportunity, that potential for that to happen, which, you know, maybe the market today is sort of taking into account a little bit and just sort of pricing in that discount a little bit. You mentioned a minute ago that back in I think it was March last year, they were trading about $8. They rebounded spectacularly in the time since, and they actually went up to about $160 by February in 2021. And again, keen-eyed Afterpay investors will probably recognize that the price being offered by Square is actually below that price. It's actually a 21% discount to that price. So even though the shares are up 23% today, it's still a discount compared to what it was earlier this year. Yeah. That does raise some questions, I suppose, particularly in light of what happened last week or over the past couple of weeks with both Apple announcing that it would, or potentially going into the buy now, pay later space, and PayPal also expanding into that space in Australia. There may be question marks as to whether or not Afterpay's management team are starting to question, okay, well, maybe we do need to get out now. Maybe our future isn't what it was. Maybe there is an element to that. I think from an investor perspective in Afterpay, I think there is certainly a heightened competitive risk factor. Those are big businesses that are coming in and encroaching on Afterpay's turf. The other thing, though, is Square was also a company that could have easily come in and encroached on Afterpay's turf as well. I think that the tie-up between Afterpay and Square would make for a very strong business by combining Afterpay and also the Cash App. I think that could be a very, very good strategic long-term move. And I think there's potential for the Afterpay management team to be just recognizing this potential as well in accepting in recommending this deal go ahead. I think that they probably recognize that by tying these two businesses together, that the future is actually better for Afterpay shareholders. So I actually quite like this deal. I think it's attractive, and I also think it by allowing investors to own Square shares as well, they too can participate in the future of Afterpay, just indirectly.
Nice, man. Thank you. And for Motley Fool Pro subscribers, members, we should say that Ryan and the team will have an update out this afternoon. So look out for that. If you're not yet a Pro subscriber, feel free to join, by the way. We can help you out with some details on that. You can email us at membersupportau@fool.com.au. Quick ad there, not deliberately, but hey, if I'm saying that Pro members are going to get an update, if you want an update, that's the best place to get it. All right, so let's go to Square, Trevor. I guess to Ryan's point, mate, you don't have the option of cash. So you can always sell those Square shares at some point, or the Square CDIs, if you take the ASX option at some point. So yes, you can either take the deal now, of course, you can accept the shares and sell them subsequently in Square. But on the assumption that people at least want to have a choice of whether or not Square is a business for them, at least with the Afterpay business bolted on, let's take a step back on that business and say, what exactly is Square, mate? I've used those little Square payment, little white things. You can tap them sometimes at my local coffee van at my son's school sport. Uses Square, which I'm always excited to see, because I can tap my Amex and go. It's always great for my slightly overpriced coffee, but it's a sports coffee van at a sports field. What do you expect? But mate, so that's as much as I know about Square. I know a little bit more, but let's keep the suspense alive. Can you just give our viewers a sense of what Square is and what Square does, as in its current form, pre-Afterpay? What is the Square business?
Sure. No, thanks, Scott. I mean, Square is the US payment giant that was founded and led by Jack Dorsey, who also serves as the CEO and founder for Twitter. So the company, like you said, the company rose to fame by making it extremely easy for small businesses to accept card payments, through those white Square-like card readers that you can plug in a mobile phone or in a tablet. But in recent years, over the last 5 or 6 years, Square has actually established 2 distinct ecosystems. The first ecosystem is called the seller ecosystem, which is the traditional business, which includes the payment business that allows small businesses to accept card payments. But then they've overlaid that with a number of business tools, just to help merchants grow and manage and grow their business seamlessly. Such tools include inventory management, loyalty programs. Small businesses can access cheap loans very fast. So that's the first ecosystem. And then since about 2014 or 2015, somewhere there, Square also established a new ecosystem called the Cash App. And the Cash App is essentially a digital wallet that enables an individual to access banking services without having to step into a bank, and also do peer-to-peer money transfer, buy stocks, and buy Bitcoin. So over the last couple of years, these two businesses have, these two ecosystems have actually run in parallel within Square. And over the last 2 years, the management has been emphasizing that in the long term, they are looking for ways to integrate the seller ecosystem and the cash app ecosystem. And this deal with Afterpay is one giant step in that direction.
Nice, thank you, mate. That's a really nice summary. I guess the question is, I mean, we have recommended Square and some of our other services, by the way, and I won't do ads for those, but suffice it to say, we do have some services that recommend US stocks as well, and you can use that same email address to find out more, membersupportau@fool.com.au. Enough of those ads. Trevor, from a Square perspective, Ryan said, look, from an Afterpay perspective, he thinks it's a pretty good deal. From a Square perspective, are you happy the company is shelling out the best part of $40 billion Australian in extra shares to take out Afterpay? Is this too much, too little, the right amount of money? Is it the right strategic direction? If you're advising the Square board, what would you have said? Yes, no, or wait?
Well, Scott, I think here at the Motley Fool, right, we always go for the one credo that sometimes you have to pay for quality, all right? And this is an example where you are paying up for quality. So the deal, the way it's priced at 34x price to sales if you annualize Afterpay's H2 revenue. But if you look back over the last 3 years, Afterpay has been growing revenue at about 92%. And even if you assume, let's say, 70% growth in terms of revenue over the next year, Square is paying about 25x financial year 2022 revenue. So definitely it's not cheap, right? It's definitely not cheap. But at the same time, I would say it's fairly valued because here you are paying up for quality. So that's one on the financial side. But if you read through the commentary that came from Square, they're also looking at this deal from a strategic point of view. And here are some of the numbers for our members to look out for. For example, right, Afterpay has got over 5.7 million active customers outside of the US and about 70,000 merchants outside of the US market. Right. So through this deal, it gives Square, especially the seller ecosystem, access to 70,000 merchants or sellers outside of the US. And this is simply Square, financing their international expansion offering. And then on the second bit, if you look at Square, for the last 2 years, management has always emphasized that they are looking for ways to integrate the Square Cash App and the Square seller ecosystem to form what we call a closed loop payment system. So this transaction, they've emphasized that Afterpay will be integrated into both the seller ecosystem and also the Cash App ecosystem. So what this means is that if, let's say, you are a small business in the US, right, and you are a customer for Square, after this transaction close, you are essentially going to be able to offer your customers the ability to buy now and pay later, as seamlessly as in a very, very easy way. I think Square has got probably more than 4 million small business customers in the US. So this deal simply opens up the door for Afterpay, for it to expand its reach. And then on the other side, Square's Cash App customers, right? This transaction will enable them to be able to, access this financial product. As I think, as Ryan said, or as Chris said, that millennials are moving away from credit cards towards this buy now and pay later type of financial product. So this deal, all right, I mean, Square has got close to 40 million Cash App customers. So just imagine after close, all those customers can simply wake up one morning and they can access the Afterpay buy now and pay later. So I think this transaction, right, although on the financial side, I would say it's fairly valued, right? But I think there are more strategic synergies that both Square and Afterpay can extract from this particular deal.
I feel like you guys talk about millennials if I don't know who you guys are. So I'm going to assume you're not having a dig at my age. Now, well, I want to hear, like, Trevor, about your response. And it's one of my favorite ways. You very rarely see this in consumer. It tends to be normally in technology, but I guess that's to your point, Kevin, about calling it a fintech company. There is very much that sense of these businesses on both sides. You're buying customers and you're buying a product, and you kind of combine those. You can sell your product to their customers, their product to your customers. I mean, it's a pretty nice way to bring that multiple down really, really fast. If you can get some degree of crossover and sell through, it opens up a massive opportunity and really can make the deal much, much cheaper very quickly if the customer product fit is as good as they hope it's going to be. Chris, let's go to you, mate. I'm curious from your perspective. You're a keen buy now, pay later watcher here in Australia. That could almost be a full-time job these days. There are so many BNPL players in the market. Last count, I think there was 462 of them. I'm kidding, but not much. There's a lot of them out there, mate. How should other BNPL shareholders be thinking today? Are they excited about a takeover premium? Are they scared because between this type of Square and Afterpay, and then you've got Apple Pay and PayPal and others, is the vice closing, or have the skies just got a bit bluer and a bit brighter given some of these takeover premiums being paid?
Yeah, I think feelings should be a bit mixed at this stage. So on the negative side, we've seen the share price of a number of buy now, pay later companies fall a fair way since early this year. In fact, as Ryan mentioned earlier, even Afterpay was trading at one point for around $160 per share, which is still a pretty significant premium, even on Square's offering, which we're seeing right now. And I guess a part of the reason behind this is the growing competition in the industry. So we've seen the likes of PayPal enter the space with its PayPal Pay in 4 solution, and PayPal already has millions of global merchants that it could very easily offer this solution to, and its buy now, pay later offering is also considerably cheaper for merchants, and it has no late fee for consumers. So this presents a very real threat to smaller buy now, pay later providers. So your businesses such as your Sezzles, your Zips, your Laybys, as you said, there's a plenty on the ASX.
Open Pay,
yeah.
There's more than you can count. Exactly.
Yeah, absolutely. So, and there's also the news that Apple will be offering a buy now, pay later solution in partnership with Goldman Sachs, and of course today the partnership between Square and Afterpay, it just adds to this competitive landscape, as both businesses have a massive network of merchants, and it could potentially make things even more challenging for the little guy to attract new merchants to its platform. But on the flip side, on the positive side though, this deal shows that there is a lot of value in the significant merchant relationships that some of these buy now, pay later businesses hold. So one of the key question marks around Afterpay and some of these buy now, pay later businesses was that some of the big players could create their own solutions to plug into their existing infrastructure and I guess outcomplete the new pure play buy now, pay later businesses that are coming to the market. And this is something that we saw with the likes of PayPal, for example, but with Square opting to partner with Afterpay instead of building out this functionality itself. It to some extent shows that perhaps it is harder than what it looks. So for the likes of these smaller buy now, pay later providers, perhaps many of these businesses are going to also be looked at as potential acquisitions down the track as well. So because certainly starting with an already established network of both merchants and customers to build off of is easier than starting from scratch. So it's certainly a space to keep watching, but I think overall reviews are a little mixed on exactly what's going to be happening moving forward from this result.
Watch this space, Chris. Speaking of which, later this week, we're going to have a buy now, pay later special video out. Now, we're already going to do that, and then today's news broke, which is why we're bringing this video to you earlier than we had expected to. But later this week, we are going to touch base on some of those buy now, pay later providers and just detail who they are, what they offer, and what the investment merits of each are. So stay tuned for that one. In the meantime, Kevin, I just want to come back to you as we come towards a close. I guess I've got 2 questions for you, mate. The first one is, if we think about the buy now, pay later space, and we think about the price being offered, I want to try and tie together a couple of the threads that we started with earlier in the chat. $150, the guys have mentioned, it was 160 at one point. I had 152 as my top, so I obviously missed that one. 160 at one point, 8 at another point. Depending on when you bought, 129, 126 feels like either a great deal or maybe you're actually locking in a loss, which frankly, given Afterpay's success, it's almost hard to imagine that the people have bought it and are suffering a loss, but that's absolutely true. From an outsider's perspective, you look at Afterpay, you look at the Square deal. Is Square getting too good a deal? Are Afterpay selling out too cheaply? How does this deal feel to you? Not from a recommendation perspective, just from is Square getting a cheap deal at an opportune time? Is Afterpay selling out at a high price given the competition? How do you view the kind of dynamics of the deal as it currently sits?
Yeah, it's quite interesting, Scott, isn't it? Normally, when you have an acquisition like this, shareholders of the smaller company that's usually being taken over feel really aggrieved because, yes, while you get the 20% or 30% pop up front, you're actually losing a lot of that runway for growth that the company potentially had. So you kind of lose that additional upside that the potential that the company had. In this case, it's quite interesting because while Square is a much bigger company than Afterpay, when you look at the growth, Square actually, by the way, announced results concurrently with this announcement this morning. And when you look at the results, they're actually phenomenal results. Gross profit for Square was actually up 91%. So in a sense, it's actually growing at a faster pace than Afterpay or around about the same rate. So I don't know if Afterpay shareholders are actually losing that much additional upside. But I do actually think, in a way, especially when you consider what's been happening more recently with the PayPal announcement of them moving into the buy now, pay later space, I actually think Afterpay shareholders, their investment in this company is getting a little bit more de-risked. You're getting exposure to the broader Square ecosystems that Trevor was talking about earlier, the seller ecosystem, the Cash App ecosystem, and those ecosystems are still growing. You may not be happy with everything that Square is doing, especially around things like Bitcoin and everything else. You may like that or you may not like that. But I do think overall, if the company can actually execute and do well, you actually possibly getting a higher quality overall business with decent amount of growth. I think at the end of the day, and I strongly agree with what Trevor was talking about, I think the headlines would be about the numbers. 30 to 40 times sales is quite, it's hard to argue that's cheap. So I'll never stand here and say that's ridiculously cheap. Yeah. But I do think when you look at the element of business in this space, is a very dynamic industry. If you can get a company that's really pressing on its advantages, the way Square is, the way Afterpay is, tie those two together. Jack Dorsey is a fantastic leader. Then I think there still can be potential upside, even if you did buy at 150, 160 earlier this year. But that's something to work out as investors look at Square more closely and understand what potential plans they have for Afterpay.
It's a good point, right? Because there's potentially going to be capital gains tax relief from this takeover. At least Square is applying for that currently. So to some degree, some takeovers, you take the cash, you lock in a loss. You can always buy shares in something else, or of course the acquisition of the acquiring company. But in this case, you can almost own Square seamlessly through your Afterpay deal anyway. So all is not lost. The game is not yet at an end. Mate, my last question for you before we finish off, what's been an awesome chat, and thank you all for participating, Kevin, is just the question around products and features. There's the old line that you've got to be careful when your product becomes someone else's feature, you can be in trouble. Think about the digital camera being part of a phone, and the phone's the easiest one, right? Because it's a Walkman, it's a diary, it's a camera, it's all those things all roll up into one. When your product becomes someone else's feature, there is some challenge. I do wonder if you're one of either Afterpay or the remaining players in this space. I guess I'll just ask you to reflect on: Are we at a point where we're seeing with this deal and others the buy now pay later product becoming a buy now pay later feature of something else? Does that weigh on the future of Afterpay, Square, and the what's left now of the pure play BNPL players, or is there still a couple of paths left?
Yeah, absolutely. I think what we've seen in the buy now, pay later space is a classic evolution of a new industry. And it's funny to call buy now, pay later new because in a sense it has always been there. But in another sense, Afterpay has kind of reinvented that model of payments. And I think initially we had companies like Afterpay, which were early movers in the space, really just helping the market to understand what the growth opportunities were. And then we had the pretenders and the competitors all arise simultaneously. And now, I was just chuckling at you and Chris trying to remember all the different buy now, pay later companies in that space. And I think that kind of validates the size of the growth opportunity. But seeing companies like PayPal and Apple and now Square encroaching in this space really suggests to me that for them, they couldn't really pass up on the opportunity of having that feature, but potentially this may not actually be the key growth driver for their business, right? It's probably more complementary to what they're trying to do separately. And so I do agree that buy now, pay later, just reflecting on it, seems to be becoming a feature. We always chat internally and wonder, won't companies, traditional finance companies like banks, eventually get to a point where they are trying to partner with other types of technology companies to do just offer buy now, pay later, or some form of interest-free credit offering for short-term purchases. It's a very interesting space. It's changing and evolving constantly over all the time. I don't think on Friday, when Afterpay shares were down 5% for the day, I don't think anyone was really expecting Square to come up with an offer that's 30% higher this morning. That just tells you that things can move fast in this space.
I love it. That's a great way to finish. See, I told you these guys were smart. I'm very lucky to work with each of them, and you're very lucky, I think. I hope you don't mind me saying, in getting their insights for this special video we're doing, literally hot off the presses. We are recording this on Monday, the 2nd of August. And frankly, I say that for 2 reasons. One is because we're going to get it out quickly to you. The second is because anything could change from here. But as we currently stand, that is what we know about the Square and Afterpay deal. The biggest deal, as KG said, in probably, well, a very long time on the ASX anyway. For Motley Fool Pro members, a reminder, you will get specific service advice later today, maybe even before this video is published or concurrently potentially. So we will give you very specific guidance as to what the team think you should do with your Afterpay shares. If it impacts on Square and the team's view of that, you'll get that update as well in Shooting Stars and elsewhere. In the meantime, don't forget, later this week, we will have a Buy Now, Pay Later special of what now will be the rest, or what's left of the Buy Now, Pay Later industry, but a fascinating conversation. We've only just scratched the surface of it today. In the meantime, thank you for watching. We'll see you next time. Fool on.